JD stock is down 58% year to date. This has been a really huge drawdown, and being a JD shareholder has been really painful this year. So, if you want to know why JD stock is down a lot this year, and if you are wondering if is this a good opportunity, is this a good investment at this price, you have to watch this video. So, let's talk about JD. First, JD has been a company that had been a lot of struggles this year. I've already talked about Chinese companies and YTD has been a lot of competition from Alibaba and Pinduoduo, for example, this year, and their margins are down, even though JD is still growing. You might think JD is not growing as they used to be, but they are still growing. It's a more mature company now, but they still sell a lot of goods. They are still a huge company, but the shareholders are not loving the stock anymore. So, but even on mature companies, on companies that are not growing, or even companies that their revenues are decreasing, you can find value and have good investments. And JD might be a deep value opportunity right now, and I will tell you about that. So, looking at JD at the moment, they are trading around $25. If you look at the graph in the last 5 years, they are trading at almost a 5-year low. They're like in the end of the 2018 year, they were under $25, and now we are seeing the same. But now JD is a lot bigger. They have a lot of cash in hand, which I will talk next. But I'm starting to think JD is a really a deep value opportunity. You are past other phases. JD in the 2 years ago was a growing stock. It's a high growing company. Last year they started to see it's around trading fair value. It's maybe a mature company, but now I do believe it's a deep value company. There are a lot of problems on the Chinese economy. Most Chinese stocks are struggling, except Pinduoduo, which is an exceptional company. But even Alibaba is a little bit down this year. But JD are struggling the most because they have been having a lot of competition from Alibaba and Pinduoduo. They are like pricing wars on China. Everyone wants to gain market share, but JD is still growing. They are expecting to grow this year around 3%. Last year they grow, even though last year was really bad, they still managed to grow around 10%. Everyone is talking about China having problems, not growing anymore, but not growing for Chinese economy, it's growing at 5%, which is really, really good. Imagine US growing at a 5% in 1 year. That is really, really good. But there are a lot of fear, and when we see a lot of fear and shareholders hating the stocks, might be when we can find the best opportunity. And I do believe JD, even though it's not my favorite business, when I look to JD, they are not growing as fast as Alibaba or Pinduoduo, for example. They have worst margins. They have really low margins. I don't like that, but still, a business like JD, really, they sell a lot of goods and still manage to have their low margin, but their earnings are still really high. Even though they only have 1% margin last year, they are still free cash flow positive. They are increasing the shareholder returns, and they are still making a lot of money. If you look into their cash, that's why I'm doing this video, is because when I was looking again at JD, they have almost $33 billion in cash in hands at the moment, in their reserves, in their balance sheet. And what is the market cap, the valuation for the company? They are trading around 33 billion. Imagine you want to buy a company. Imagine you can buy a company for 10 billion, and that company will have free cash flows for the next 10 years, still one of the best companies, with a really good brand. They have one of the best logistics in China and in the world, and you still can buy that company for $10 billion. You have the right to their future earnings, and you still gain that same amount in cash. What will you do? Of course, you will buy that. That's how the shareholders are hating the stock, that this valuation doesn't make sense, for me at least. It might be the best opportunity, even though I would prefer Alibaba business, I would prefer Pinduoduo business, but I'm looking at JD. It might be a deep value opportunity. I do believe JD will not be as dominant as Alibaba or Pinduoduo, for example, but they are still managing to grow with around the rate of their economy. They will still make a lot of profits. Uh, if they continue to make this profit, their debt, they can pay their debt with 1 year cash flow, for example. And for me, JD has like three secrets. JD shareholder, I want them to buy a lot of shares. They can buy their entire company at this price with the cash in hand they have. So I don't know what will happen here, but I want them not to announce buybacks, because the day their management announced they will do a huge buyback, the stock will go up like 10% or even 20%. It might be, because this is a really deep value opportunity in my opinion. That's why I'm talking about that. It's a company I really like. They can increase the future shareholder return by doing a lot of buybacks, and at this valuation it will make a lot of sense, because we want to do buybacks at a cheaper valuation, so you can increase the shareholder return. You can have margins expansion. At the moment they are having margins around 1%, 2%. They can have, even though it's a low margin business, you can look into like a retail. They can have 3.5% margins easily, in my opinion, in the future. So they don't have a lot of, they have almost no debt. They can pay their debt easily. So they can, and one thing I really like this in JD, it's their management. They are not because they have a lot of money, they are not investing in every opportunity they have. They are trying to choose the best opportunities, so the shareholders can have the best return on their money, as like JD as a company as well. So that's something I really like. They started to pay a dividend, but you can argue that even though this cash in hand, they could pay that to the shareholders, but it's a Chinese company. They don't want the money to go to the shareholders. They will prefer to invest, and you will not have a claim into that money. But that's the risk we are having investing in Chinese company and in JD, for example. But when I look into my assumptions, I'm trying to be a little bit conservative. I'm expecting margins to be around 3.5%, which I do believe they can do it. I'm using a huge discount rate, 15%, because the risk we have in Chinese companies. I'm using a median P of 15, expecting them to grow around 8 to 5%, which is the rate the Chinese economy will grow in the next few years, I do believe. So I'm not expecting as much as that, but even with adding the cash in hand, my intrinsic value for this company is around $45, and now they are trading at $24. It's almost a 50 cents on the dollar. I do believe this is one of that types. I can't find any other good company as JD trading at this valuation with the cash in hand, like their value equals the cash in hand. So I do believe this is a really good opportunity at the moment, and that I have to be honest with you guys. I started to buy JD last year in their bottom around $35, and at the beginning of this year the JD stocks was up a lot. I was having a lot of profits. It was around $66, and I decided to continue to hold the company, because I don't like to sell company. I'm investing in the company for the long term, and since then, since the beginning of the year, the stock is going down a lot and didn't stop for a minute. So at the moment, I'm red in the stock. So I started to buy more now. I bought more JD at $28 and now at $24. I increased my position, so that's why I do believe in this company. I bear in mind this is just my opinion. You shouldn't buy this company just because I have it. So I'm trying to talk to you about the strengths I see in this company. It's a really good company, not an exceptional company because they don't have a wide moat, but they have a really good brand, one of the best logistics in China and in the world. But this is a difficult business as it is for retail. They have no Their margins are not high as I would like to see it, but their returns on invested capital, for example, it's 8.5%, even though their earnings are not optimized. When their earnings are optimized and their margins, I do believe they will have a really good return on invested capital because the management team has been doing a really good job, in my opinion. But I do believe this is a good opportunity. Their market valuation, they have the same amount. They almost could buy the company at this valuation without their cash in hand. Their debt is really low. They can pay their long-term debt with 1 year's free cash flow, and I do believe they will recover in the next few years. I'm hoping on that, and I do believe if the management starts to do a lot of buybacks, if their margins recovers, we can see PE expansion as well, and that will be really huge for the shareholders. It can have a really good returns in the future, and that's why I do believe in this company, guys. I hope you find this information useful, guys, and I hope you liked the video. So if you liked it, please subscribe, guys. Bye.